Cropchem Limited Q4 FY26 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference, please signal for an operator by pressing star and then 0 on your touch-tone telephones. Participants, please note that this conference call is being recorded. I now hand the conference over to Mr. Riju Dalui from Antique Stock Broking Limited. Thank you, and over to you, sir.
Thank you, Farah. Warm welcome to all the participants on Q4 and FY26 earnings call of Sharda Cropchem. Today we have Mr. R.B. Bubna, Chairman and Managing Director, Mr. Shailesh, CFO, and Mr. Jetkin Gudka, Company Secretary on the call. Without any delay, I would like to hand over the call to Mr. Bubna for his opening remarks. Thank you, and over to you, sir.
Thank you, Mr. Dalvi. Good afternoon and very warm welcome to everyone present on this call. Along with me, I have Mr. Shailesh Mahendale, our CFO, and Mr. Jetkin Gudka, our Company Secretary, and SGA, our Investor Relations Advisors. Hope you all have received our investor deck by now. Ladies and gentlemen, I am very pleased to share that FY 2025-26 has been, by every measure, the best year in Sharda Cropchem's history as a listed company. Despite the global headwinds from tariffs and recent war, we have delivered our best ever annual PAT, our highest ever EBITDA, and our strongest ever revenue performance. And this has been achieved with consistent discipline, quarter after quarter, through a year that presented both opportunities and challenges for global agrochemical industry. The company expects this growth momentum to continue in the FY 2027. Our performance is the result of years of patient investment in product registrations, a clear and focused business model, and the confidence that our customers and suppliers continue to place with Sharda Cropchem. I thank each member of our team for their dedication, and each of you for this call, for your continued interest and trust. As you are aware, we are engaged in the marketing and distribution of wide range of agrochemical products, catering to a diverse global customer base. We develop comprehensive dossiers and obtain product registrations in our own name. We continue to allocate substantial resources towards securing registrations, which strengthens our market presence and helps establish a sustainable foothold across the markets. As on 31st March 2026, our total product registration stood at 3,011. Additionally, 1,004 applications for product registrations globally are in the pipeline. Coming to the industry dynamics, a global agrochemical market is showing signs of recovery driven by revival in demand, complemented by gradual recovery in the pricing. Inventories have come to normal levels across distribution channels. In Q4 26, our total revenues have grown by 13% to 2,065 crores with annual volume growth at 4%. We have seen volume growth in Europe and Latin emerging as key contributors. Volume from agrochemical segment grew by 5%, and non-agrochemical segment degrew by 2% year-on-year basis. Our gross margins have expanded by 750 basis points to 37.3%. As guided earlier, we expect the gross margins to be in similar range in FY27. EBITDA for the quarter stood at 513 crores, which is a growth of 75% on Y-to-Y basis with margins of 24.8%. For FY27, we are on track to maintain healthy EBITDA margins in the range of 18 to 20%. PAT for the quarter stood at 319 crores, showcasing a growth of 57% year-to-year basis. Working capital days stood at 98 days as on 31st March 2026, showing an improvement by 20 days as compared to March 2025. Capex for FY26 stood at 505 crores. Looking at the performance, the Board of Directors have recommended a final dividend of Rs 9 per equity share, along with the interim dividend of Rs 6 per equity share paid in December 2025. The total dividend for 2026 FY26 is aggregates to Rs 15 per share. With this brief overview, I now like to hand over the call to our CFO, Mr. Shailesh Mehendale, for discussing our financial performance. Thank you, everybody. Thank you once again.
Thank you, sir. Good afternoon, everyone. Coming to Q4 FY26 performance, revenue stood at rupees 2,065 crores in Q4 FY26 versus 1,829 crores in Q4 FY25 with an increase of 13% year-on-year. Coming to the split, agrochemical business grew by 14% year-on-year basis to rupees 1,927 crores, whereas the non-agrochemical business degrew by 0.3% year-on-year to rupees 138 crores. Gross margin stood at 37.3% in Q4 FY26 as against 29.8% in Q4 FY25 with an increase of 750 basis points. EBITDA grew by 75%, which stood at rupees 513 crores with EBITDA margin at 25%. PAT stood at rupees 319 crores versus rupees 204 crores last year, showing a 57% growth year-on-year basis. Coming to the full year financial year 26 performance, revenue stood at rupees 5,268 crores in FY26 versus rupees 4,320 crores in FY25 with an increase of 22% year-on-year basis. Coming to the split, agrochemical business grew by 25% year-on-year to rupees 4,717 crores, whereas the non-agrochemical business grew by 1% year-on-year to rupees 551 crores. Gross margin stood at 35.9% in FY26 as against 29.9% in FY25, increase of 600 basis points. EBITDA for FY26 stood at rupees 1,040 crores with an EBITDA margin at 19.7%, showcasing 69% year-on-year growth. PAT stood at rupees 681 crores in FY26 versus rupees 304 crores in FY25 with an increase of 124% on year-on-year basis. We remain debt-free company and have cash bank liquid investment of rupees 702 crores as on 31st March 2026. We can now open the floor for question and answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may enter star and 2. Participants are requested to please use only handsets while asking a question. We will wait for a moment while the question queue assembles. The first question is from the line of Anubhav Mukherjee from Prescient Capital. Please go ahead.
Hello. Sir, thanks for the opportunity and congrats for the great result. My first question is that for the current quarter, the revenue growth was 13% and volume growth was 4.3%. Can you please share what was the contribution of Forex and realization year-on-year for the current quarter?
Mr. Mukherjee, your first sentence was clear and loud, but second and third sentences have become very dim. So can you repeat the second and third sentences of your question once again?
Sure, sir. Sir, I was asking that for the current quarter, Q4 FY26, the volume growth was 4.3% and revenue growth was 13%. Can you share the contribution of realization increase and Forex year-on-year for the current quarter?
Yes, sir. Sir, please don't confuse the people. Current quarter is April to June, FY27.
Sorry,
we are talking about last quarter. So let us say last quarter and not the current quarter. Anyway, the volume growth for the fourth quarter was 4.3% plus. Forex impact was plus 11.7%. Price and product mix impact was minus 3.0%. Total growth was plus 12.9%. Thank you.
Thanks, sir. And sir, can you please share the same for the entire financial year?
Yes, please. For the entire financial year, the volume growth was 13.4%. FX impact was plus 10.3%. Price and product mix impact was minus 1.8%. And total growth was 21.9%.
Thanks for the information.
Thank you.
Sir, we have been hearing that prices of agrochemicals from China have been witnessing a major spike since the war broke out in Middle East. So are we also witnessing a major increase in our procurement price from China?
No, sir. I would clarify. There is no major increase. There could be a small increase in some products, but it's not an overall trend. As on now, up to now.
Okay. And sir, the realization and product impact was negative, as you mentioned, for the current quarter. Sir, can you please share what are you witnessing in terms of price realization in your major markets like NATAM and in NAFTA and Europe?
There is nothing to worry. The prices have been stable and there has been a slight increase in the prices.
Good. And sir, can you please share the guidance for the revenue growth for the FY27 and also specifically for each of the regions?
See, each of the regions, it will be not proper for me to elaborate because it all depends on many factors which are not in anybody's control, particularly weather and the current war situation and all those things, But I can say for the FY27, we expect the revenue to grow about 10 to 15%, gross margins around 35%, plus or minus a few percent, and EBITDA will be 18 to 20%.
Thanks, sir. And sir, the
I'm sorry to
NAFTA
interrupt,
region...
Mr. Mukherjee. Could you return to the question queue? We have participants awaiting their turn.
Sure, I'll get back in the queue. Thanks.
Thank you. The next question is from the line of Disha from Sapphire Capital. Please go ahead.
Hello.
Yes.
Am I audible, sir?
Yes, madam.
Yes. Congratulations, sir, for a great set of numbers despite the challenging geopolitical environment. So my question was again, sir, on the margin as we guided for gross margins to be around 35% and EBITDA of 18 to 20%. So what is giving us the confidence of being able to sustain these margins in the back of such volatile environment? And any raw material price increase, will we be able to pass this on completely to customers? If you could just elaborate a bit more on that, that would be really helpful.
Madam, you have put three questions in. Please ask one by one. I'll answer you. That will be more precise. Can you repeat your questions one by one?
So firstly, sir, if you could just highlight what is giving us this confidence of being able to maintain high margins in such volatile environment?
Madam, our feel of the market, our communications with our customers on a regular basis, and the general situation. That gives us this confidence.
Okay, and sir, this raw material price hikes, will we be able to completely pass this on to the customers? What is the situation there?
Normally, we are able to pass because the competition is limited. We are not dealing with products which are freely tradable, and registration process is very expensive and time-consuming and not very interesting to most of the investors. So the competition is also limited for the agrochemical products, particularly in developed markets, and that gives us a confidence that, and so far it has been our experience, 80 to 90% we have been able to pass the price increase of the raw materials, and the customers have very gracefully accepted it.
Okay, that is really great.
Unless there is a unique situation where there is a lot of product in the pipeline and in the sort of storage, those are only special. But in the normal cases, most of the price increases we are able to pass on to our customers.
Okay, that is great to know, sir. So, and the next thing was on our revenue growth. So in our interview on television, we had mentioned this year we're targeting 18 to 20% sort of growth, and right now you just mentioned that we are targeting 10 to 15%. So are we being too conservative? How should we look at that?
If I have said 18 to 20%, then maybe I misstated. I would say it will be 10 to 15%.
Okay. And then just
I was talking about EBITDA. The 18 to 20% was EBITDA and not the revenue growth.
Okay, so 10 to 15% is what we should work with, right?
Yes.
Yes. Okay, and just the last question. So I was looking at the segmental breakups in the agrochemical sector, particularly in the NAFTA region. I think we've seen some revenue degrowth of by 6%. So what was the cause for that?
No specific cause. It could be based on the weather conditions and the economic situations in the United States.
Okay, but no major challenge as such?
No.
Okay. That is it from my side. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Rajat Sethia from iThought PMS. Please go ahead. Mr. Sethia, your line is unmuted. Please ask your question.
Yeah, hi. Can you hear me?
Okay, yeah. Yes. Please go ahead, sir.
Okay, thanks. So, sir, my first question is about the gross margins. So, if we remove the impact of forex volatility, what would be the gross margins for the company for the whole year?
Sir, I have stated it will be around 35%. It could be 36, 37%, or it could be 34%.
Oh, no, sir. Sorry. I didn't mean for the next year guidance. Like this year, we have reported 36% gross margins, and there's a lot of contribution from forex exchange movement as well. So I'm just wondering, if we strip off the forex movement from the numbers, what will be the gross margins?
So this will require some calculations which I am not ready during this phone call.
Sure, I understand. So is it possible to touch base on this point later on through the investor relations team or by any other means?
Yes, It is possible.
Sure, sir. Thank you. I will touch base on this later on. And sir, what were the gross margins in Europe in this quarter as well as the full year?
1 minute. The gross margins in Europe was 41.5% in this quarter, and the whole year it was also 42.5%.
Thank you, sir. And sir, what was the volume growth in Europe in FY26 full year?
Volume growth was about 16%.
16%. And in terms of the outlook for next year for Europe, do you see similar
Yes.
growth or okay, similar growth?
No, we see the similar.
Okay, understood. Sir, one question about the forex losses that we reported in Q4. So if we look at the USD, EUR, Euro movement during the last quarter, it was pretty much in a very tight range of 1.15 to 1.7, and yet we reported 26 crores of forex losses. So I was just confused, or if you can help us understand, despite such a tight movement between USD and Euro, there were still losses on forex side.
I would request Mr. Shailesh Mahendra, our CFO, to answer this question.
Yeah. So this particular forex loss, which is reported in Q4, is mainly on account of unrealized forex loss on the realignment of foreign currency trade payables, right? So that is the only, this is unrealized loss, which is accounted. So Euro USD movement is not really that movement. There is no, but this is on account of the realignment of USD realignment loss.
Mr. Rajat, I'll elaborate here. These losses are calculated for the exchange rate which is there on the last day of the quarter. Okay. This does not reflect the total trend. The last day there could be many reasons, and that becomes the key factor. After 2 days, the situation may change if the dollar euro exchange rate changes. So all this is an unrealized loss. It is not actual loss. Understood?
Got it, sir. Thank you. And sir, what was sales return during full year?
Sales return was not very significant. I am not ready with this information because it was not so significant.
Sure. And sir, if you can help us understand non-agrochemical segment very well, the whole year we grew by probably 1% or so. So what's happening in that segment? If you can
give chance to some other speaker. You had many questions, and I'll wait in the queue for the next round.
Sure, sir.
Thank you. Thank you. The next question is from the line of Riju Dalui, Antique Stock Broking. Please go ahead, sir.
Yeah, hi, sir. So my question regarding your top line revenue growth. So we are guiding 10 to 15% kind of a top line growth. But if you look at some of the technical prices,
Mr. Dalui, can you please speak? Can you speak a little slowly and little more loudly? Because we are not able to get your questions. Slowly and loudly.
Okay, sir. Is it audible now?
Now it is more audible, more clearer. Audible was before also, but not
Thank
clear.
you, sir. So my question regarding the top line growth guidance for FY27, that we are guiding 10 to 15% kind of a top line growth. But if we look at in terms of key prices for the agrochemicals, prices of agrochemical increased by 10 to 15% on a sequential basis. So are you expecting only price-led growth and volume growth will be lower? How we are guiding 10 to 15% top line growth? So that I wanted to understand.
Mr. Dalvi, I am not doing all these detailed calculations. I have given you my impression and the feelings that we have about the financial year 2027. All these are just impressions. They can change, and this is just my impression as on today.
Understood. And one question for Shailesh. So how much tax rate we can work for 27 and 28? Because if I look at last 2 years tax rate as per the PVT that was started.
So I cannot say specifically that this is because of this factor.
Yeah. Thanks, sir. I'll get back in the queue.
Thank you.
Thank you. Next question is from the line of Rajat Sethia, iThought PMS. Please go ahead.
Thanks, sir. Sir, what would be the revenue from new products that we would have launched in the last 3 years?
What did you say? New products in the last 3 years?
Yes, sir. The revenue from those products, let's say last 3-4 years.
I can make a guess. It could be about 30%.
Okay, sure, sir. And sir, if you can also share the region-wise, you have shared Europe, gross margins in Europe. If you can also share gross margins in other geographies for the quarter as well as for the whole year.
Yes, sir. Now, I had given you the figures for Europe.
Yeah.
The gross margin in NAFTA region was 28% in the quarter 4 and 25% for the year 25-26. For LATAM, it was 28% and 25%. Rest of the world, it was 46% and 43%.
And so Europe for the full year?
Europe for the full year, 2%, 42.5%, approximately 42%.
Right. And so if you can also talk about the non-agrochemical segment a little bit. How are you seeing the outlook now? Last year was pretty flat in terms of our volume growth or the overall revenue growth, business growth.
Yes, I would say we should be able to grow about 5 to 10%.
Okay. And sir, how is the pricing scenario there or the margin overall? How are you seeing?
The margins have improved in the last year compared to
Okay.
previous years.
The reason would be our product mix or the pricing scenario has changed?
Reason for which, you mean agro or non-agro?
For margin improvement. Non-agro margin improvement.
See, non-agro is a special kind of business. I mean, we are not stocking and selling, and you can, so every time the customer gives us a requirement, it's a specific requirement for every customer, depending upon the specification, width, length, and content of the conveyor belts. So after we receive an order, we conclude the order, we get quotations, and then we start manufacturing. Goods are manufactured after having received a confirmed order.
Sorry, sir, I was not able to hear your last line.
What I'm saying, like, unlike agrochemicals, the conveyor belt business is goods getting manufactured to the specific requirement of the customers. You understand? So the goods are manufactured after the specifications are concluded and finalized.
Sure. So you mean it's a customized product?
It's a made to order, not already made and then supplied.
Sure. So sir, what led to margin improvement? I was not able to understand that part. See,
what did you say? Margin improvement.
What is driving the improvement in margin?
Because now we are seeing the trend, we are having very good demands, more requirements, and we are able to improve on the margins because the demand is also improving.
Got it, sir. And sir, over the next 2-3 years, what is the kind of opportunity that exists from the products which are going off patent, and are we registering for such products? Yeah.
Mr. Sethia, this process is not done by us. We are only seeing our innovators, our gurus who invent the products. They are planning much ahead in advance. So they are doing all the R&D and developing the products, and then they also have an exposure of selling those products under patent for the first 10 years. Our role comes only thereafter. So we choose and select from what is available to us and what is presented to us by the innovators.
Right. Yes, sir. That is what my question was. Like, what is the opportunity you see from these products going off patent in the next 2-3 years?
Now, some products will continue to go off patent because as the technology is developing, some products which were having used in the past, they also have some weaknesses, some side effects on the health or climate and so many things. So innovators try to find out the products similar to them, but without those weaknesses.
Sure. सर एक लास्ट सवाल था कि
sorry to interrupt, sir. Please return to the question queue.
Sure.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yes, sir, I just wanted to understand, are the tailwinds for the agriculture and agrochem sector back as much better than past? So it's helping us and companies like us, for example, and Ukraine war, any impact hasn't, because Ukraine used to be the granary of the world and the Europe, sir.
You will be very much surprised, Mr. Vivek. We have been supplying our goods to Ukraine for the last 5 years, even now. They are buying from us. Their ports have been destroyed. The goods are getting transported to European ports, and from European ports, the trucks come from Ukraine and pick up the goods. We are paying for the cost, and then we are able to pass it on to our customers. But our business in Ukraine is going on. We are getting orders on time, and we are getting payments on time. This is a very big surprise to the world, but this is what is happening in agrochemical business. People need food, and they need food, and they need also agrochemicals. And I have not heard in the war that some agricultural fields have got destroyed or damaged in it. They damage a lot of other things, but not the agricultural fields.
Other than Ukraine, also the same situation is prevailing in Western Europe and US market and NAFTA and Brazil.
Yes, sir, we are also supplying our goods to Israel. To give you an reply, we are also selling to Israel.
Do we supply any rough idea?
Beg your pardon?
Our exports are happening to what total number of countries? Any idea?
About 70 to 75 countries around the globe.
Okay. Really good. And the niche we have developed with the new product registrations, etc., which last year also we have, I think, secured some 40-50 registrations from 2,950 to 3,000 plus. And as you mentioned, the pace is unpredictable, but it is good that slowly, if we are in a position to grab more, it is going to benefit us more because of the limited competition which our registered product face in the countries. And it is nice to hear the Middle East crisis is not affecting our exports, because we were fearing that maybe the Strait of Hormuz is likely to affect our export to Europe. But I think you mentioned that it is not at all affecting us, and our freight costs are also in the similar range, or so not affecting our gross margins. So our gross margin guidance is around 35%, no?
Yes,
For
sir.
the next year. Good.
Yes, sir. Yes, sir.
Okay, and congratulations, and we'll be happy to see the company growing at this brisk pace. Thank you.
Thank you, sir. We need your good wishes and
Yes, sure.
motivation.
Surely.
Thank you.
Thank you.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity. Sir, if I look at our registration pipeline as well as the products that are registration as well as pipeline, so the amount of intensity for incremental registration that we receive YOY as well as the registration that are in pipeline, so they are very stagnant for the past 3-4 years. So how should we look at our business going forward? Because we say that the approval by authorities has stretched. So how should we look at our competition going forward?
Sir, there was a echoing in your voice, and the question.
Sir, I'll repeat my question. Sir, so I wanted to understand
one by one.
Yes, sir. Yes. Sir, so I was trying to understand, sir, the registration that we have, sir, in YOY incremental whatever. So they were like 2,700 during FY22. Right now they are 3,000. So there has not been a lot of jump over these 5 years. At the same time, our pipeline has been closer to 1,000 or 1,100 registration that we are planning to add. So the incremental addition has got very slowed down versus what it was earlier. So how should we look at our business going forward? Because on one side we mentioned that because of authorities stretching the registration timeline, competition is limited, but also our own registration pipeline is getting impacted. So how should we look at our business going forward from this perspective?
Mr. Madhur, it's just like when you go to have your meals or food. Sometimes you are able to get some sweets, sometimes you get a special dish, sometimes a third special dish. So all those foods are capable of filling your stomach and satisfying your hunger. So these products new products are coming. They are more sophisticated, more safer to use, and more effective. But if they don't come, that does not mean the agricultural stops. Agriculture still continues with the older products. So this has nothing to do with the growth of our business. You understand? There were some products which were being used, I know, for last 20 years or 25 years, but all of a sudden banned that they say they are carcinogenic. But they are still being used for a lot of times, a lot of period in the history. So, yes.
Sir, so I was trying to understand. Yes, sir, please go, sorry.
No, I'm listening.
Yes, sir. So I was trying to understand that going forward, should we look at our realizations improving because of limited competition, because of, due to the lower approvals by these authorities, or how should I look at like that whatever new registration will come, their value as well as volume growth would be much higher for us going forward. So how should I look at our business? I was trying to understand on that front.
Mr. Madhur Raji, we are having not more than 5% of the market share globally. You understand? So we have a lot of scope to improve the market share. If it goes from 5 to 6%, it's almost 20% increase in Sharda Cropchem's business. And these are not dependent upon a particular product or particular registration. It is mainly dependent on our contacts, market share, and the confidence that the customers are having in Sharda Cropchem's ability to supply the promised product in promised time and at promised value. The new registration is not dictating the growth in the volume of the business. Is it clear?
Yes, sir. Sir, that was from mine. Thank you so much and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the floor over to the management for closing remarks.
Okay. I would like to thank everyone who have joined us and for having spared their time to take part into this conference call. I hope we have been able to answer all your queries. We look forward to such interactions in the future. We hope to meet your expectations in the future also. In case you require any further details, you may contact us or our strategic growth advisors, Mrs. SGA, our investment relations partners. Thank you very much. Have a nice day.
Thank you very much, sir. On behalf of Antique Stock Broking Limited, that concludes this conference call. Thank you all for joining us, and you may now disconnect your lines. Thank you.
Thank you.